So it says the jobs report number that came out for Wall Street, instead of them adding 70,000 jobs as predicted, 23,000 people were laid off additionally. So no jobs were gained. It was 23,000 additional layoffs. Unfortunately, this is now like one of many multiple signs over the past years of the economy just itself just about to just collapse under a bubble, essentially. The stock market has no bearing on reality due to the current economic environment, economic situation we're in, and everyday Americans are in. The stock market is a facade of the quote unquote economy. There's no there's no more correlation between a good stock market and a good economy. So that has to get out of people's minds. And unfortunately, I don't think it is. And I still think people are still going through every day thinking it's good just because the stock market essentially just hasn't crashed yet. But as I'm here looking, the DXY is down 0.5%, almost 0.36% due to the Japanese yen falling off a cliff. It's around 3:31 in the morning at August 8, 2006. It's crazy to me how index we're going up today after this. I mean, I'm not really tuned into the market anymore as I was back in the day, years ago, when I had a lot of money in there. And when I was swing trading and position trading cryptos, and I still have money in crypto, still have money in stocks, still have money in equities. But I'm getting like really, really nervous here. Coming up on the fiscal year. Like I said, as the time recording this, silver's up 3%, gold's up 2.3%. I mean, if you don't have any hard assets, people, you need to have hard assets. There is almost, I wouldn't say almost zero risk now getting into hard assets, even at these prices, because just the way the economy's going and the way the Fed's printing out this inflationary bubble, the money has to go somewhere. So when the bonds start to collapse and the stock market starts to collapse, the funny digits, the invisible digits, the invisible money on the screen has to flow somewhere. The liquidity has to find yield. The yield's going to essentially wind up in hard assets, gold, silver, platinum, palladium, XYZ, copper, whatever you want to put into. And it's also going to, like, in my opinion, it's going to wind up in cryptos. Cryptos, yes, they are related. There are some stock-like type cryptos, or some crypto-like type stocks, for example, but there's no actual market like the cryptocurrency market that trades 24/7 and then has valuations as such how it does, and it has assets and such how assets are created on blockchains and limited and finite and certain things, different types of blockchains. It's a lot to get into. It's complex, but the thing is, there's good technology behind some of these projects, and the technology is going to be part of this financial forefront that's going to happen in the next coming years or so, because what's happening here right now is going to be a liquidity crisis. I mean, they're going to crash everything. They're going to crash the dollar, they'll crash the yen, they'll crash the euro. They'll do it on purpose just to have some sort of quote unquote reason for them, or liquidity crisis for them to employ some sort of, electronic standard drawing rights, or the standard drawing rights the IMF has held up for years. And this is real facts. This is real stuff. The IMF, the International Monetary Fund, they have what's called a standard drawing rights, and it is a basket of all of everybody's currencies collectively put together. The problem is now there's nothing really there gives the standard drawing rights anything. But at any point in time, the International Monetary Fund can call upon the standard drawing rights in an event there is like a collapse in the currencies, perhaps, and they can create an ESDR, it's called, electronic standard drawing rights, and that's basically when all the currencies would be digital, that's happening. Currency is digital, essentially. Don't act like it's not. Just because there's pieces of paper still being printed, most of the money is digital. But look up the ESDR, look up the IMF, look up XRP, look up all the other cryptos, look up XLM, look up XDC, look up H bar. Look at how all these. Look at quant. Look at how everything is connected in this new financial system together. It's not financial advice at all. My financial advice, if I had any, is to get research on how money is made and how money works and how this market works, because it's about to be like, I saw a video that said, oh, and economists are afraid of stagflation. We are in stagflation. The technically no, because the stock market is going up, but at the rate at which cost of goods are living and the the consumer spending's at all consumer inflation's at all time high, inflation's at all time high, the CPI is at all time high. Like the the literal, excuse me, I'm butchering my fucking words. The literal purchasing power of your money is not outpacing the ROI of the purchasing power you get from the stock market. It's not anymore. All right, so I don't know. I don't want to fucking hear it. If someone's saying, "Oh, I can get 7% of my money," whoop de fucking do. My money's dropping at like 30% a rate on purchasing power a year at this point, pretty much. Like the Fed's numbers are bullshit. Fed's numbers are a lie. So I have to get this. I just had to get this video out here. Someone who I used to watch every day from like 2018 till now. His name is Gregory Manarino, and he's on Substack now. He's not on YouTube anymore, but he provides the insights every day to the market, and gave me a very good clarity on everything, on how the whole market works, on how the whole system works. And my goal is to maybe like relay this information and translate this information to like easier and shorter videos, and break it down more and more, step by step, on how the market works, and how bonds work, on how the Fed works, on how the overnight repo works, on how all this bullshit works. Just so you can financially like be aware and financially possibly gain as well. Again, I'm not a financial advisor. This is not financial advice, but I do want to see people do well. I do not like where we are together. Like the economy, it's not us. We did not create this. You can say like, oh, Trump did this, Trump did. No, it's like, and it wasn't Biden and it wasn't Obama. It's the Federal Reserve. They allowed it to happen. All right, technically Obama let it happen in 08, and they just let it rip before them. But technically, they have no say. They have the say. They could chop the head off the snake of the Federal Reserve. They can redo the Fed, but that's what happened to Kennedy. They killed Kennedy when Kennedy wanted to redo the Federal Reserve. So that's where we're at right now. We're in a really sticky situation, and people have to come together. Either we have to get we have to get educated financially on all this stuff enough and beat the system somehow, or we have to come together and we have to redo the whole system. The complete whole system has to get redone, because the way this monetary system is now, the fiat-based currency system is a slave debt system, and is nothing that financially we can gain off of, unless the way the money is created is different, and the way the money is backed is different. Because right now, the only reason money is money, or dollars I should say, is worth anything is because we say it's worth something. So think about that. Only reason why money is worth something right now is because we say it's worth something. It's not backed against oil. It's not backed against gold. Not backed against a physical asset. It's a Federal Reserve note. It's a note saying an IOU. So just think about that.